You were listening to chartingwealth.com for Friday the 24th of February 2017. Stocks are mixed. We see the S&P 500 up just barely at 0.07%. The Qs, that is the NASDAQ 100, down 0.38%. Gold is up and bonds are up. Let's jump right in first and analyze what's going on our two-day chart. With the S&P 500, we continue to see our trend line go up, up, and up. We've got a beautiful trend line ever since we saw that crossover on our 2-hour chart, and we've seen the market move up, up, up. It's beautiful. If we go in and take a look at our 2-hour, our 2-hour crossover, remember when we had the pullback and then we had the crossover going up, it hit there, rolled over, and has slipped sideways. Of course, the most beautiful trade was the one way back, all the way back to Thanksgiving of last year when we had the vertical crossover occur. And we have seen the market move up, up since then. It's moved up substantially at some points and then sideways for a while, and then this latest climb has been quite beautiful. Does appear to be getting long in the tooth, but again, as it continues to move up, we'll continue to monitor it. Because of the sideways slippage and this late in the game with the S&P, it is hard to track on this 2-hour chart, very hard. We did have that crossover at noon back on the 21st. And of course, it has slipped sideways and up primarily since then, although we've seen the 2-day chart slide back over. However, if you look at the 2-day and if you look at the weekly, they continue to bound up. Now, let's move on to a trade that's been so good to us for so long. That has been the Qs, although we're showing some signs of topping. We have our first red candle in quite a while on the 2-day chart after major upward movement. We had our weekly vertical crossover occur way back at the beginning of January, right around the 9th or so. And we had a jumping in point there, and we have seen the Qs continue, that is the NASDAQ 100, continue to build. We do see that our derivative oscillator is losing some energy, and we can tell that I have to really back off to see because the PPO has gone so high. It is turning over. It has kinked sideways at least and looks like a little bit down, and just continue to watch on that. Again, it could continue moving forward. We will, of course, analyze for you over the weekend our weekly charts, and we'll see just what's going on there. But the weekly, to this point, continues to bound up. Not quite at the same angle it had in the prior week, but it's continuing to move up. The derivative oscillator continuing to move up, and the candles. So, again, remember, all things being equal, the market tends to move in the direction of the largest chart, and that is the weekly chart. Now let's go from the Qs, and again, a little warning there, just be careful, could be topping out, and if you've already ridden it up from where we jumped in somewhere around, 119, 120, all the way up to 130, my friends, in since January to the end of February, $10 on what was a $120 ETF. Amazing climb, amazing. And we gave you the jumping in points there on that weekly vertical crossover. And of course, we had another jumping in point for those that want to do the traditional trade, jumping in around 124, 125, up $5 in less than a month. What is that, 20 days? So again, beautiful. Now, let's keep moving. We're going to stay on our 2-day chart, and we're going to go to the one that's been dragging along for a while. Look how powerful. And again, it's not always this way. Remember, we always pay attention to what works. And when it works, we use it. When it stops working, we don't. Or when the chart doesn't go in the right direction, we have to pull out. We can't force markets to do what we want it to do. but we can sure trend follow. So what do we see going on here? Well, we see around the week ending, what was that, the 3rd of February, we had our weekly vertical crossover and our jumping in point. Our jumping in point actually on the weekly vertical crossover was around 119.92 back in early February. And we saw a bounding up, hitting a high from 192 up to 120.82 or so. And during the course of it bounding up and hitting the high, actually we're showing 122.27. So really bounding up on TLT. And then it started rolling over and sliding sideways, but it's continued to stay above on the 2-day chart. And it's continued to stay above on our weekly chart. In fact, the weekly chart looks even stronger. It's continued to gain energy on the derivative oscillator, and we've seen our PPO, price percent oscillator, continuing to grow. Even as the market has slipped sideways, it's not lost that. So we have continued to follow it, and it's continued to be in play. And of course, once our 2-hour vertical crossover occurred, there was a jumping in point around 119.40, and that was just a couple of days ago, just a few days ago. And what have we seen happen since then? Well, it closed throughout the course of the day on Thursday at 120.53. That's up $1 in just those few days since the 2-day vertical crossover. So up $1 on a $119.40 ETF in just a couple of days is pretty sweet. Have bonds truly hit a bottom, and will they continue to sustain this up movement? We've just got to see. Remember, bonds typically move in non-correlation with the stock market, or sometimes actually to the absolute reverse of it. And as stocks go up, we are seeing, sort of the mixed results. The Qs is down, S&P 500's up, bonds are up. So we'll continue to monitor, and as long as our indicators tell us what to do, that's what we do. So just be careful. Don't lose that dollar gain. If you start to see that peeling away and falling off, be careful not to get hit with any big losses if bonds really start to hit it. But again, our indicators are showing us it's continuing to move forward. So again, bears close monitoring just like the Qs does. Now lastly, we're going to go to gold. What do we see there? Well, gold was showing some signs, what looked like some signs of weakness, or at least potential weakness over the course of the past 2-day candle. Why? Well, it was a spinning top. And what did gold do over the course of the day on Thursday? Bounded up 0.87%. Beautiful. If we look on the 2-hour chart, what do we see? Well, we saw gold cross over strong when it opened in the morning on Thursday the 23rd and pretty much hit its high during those first 2 hours, and then gained a little bit more throughout the course of the day. But again, up 0.87%. Quite beautiful. And of course, if you jumped into gold with us back when we jumped into gold with the vertical crossover, the weekly vertical crossover, and then of course we also had the 2-hour crossover, we jumped in at a beautiful time around 113, 114, and gold ended up closing out the day right at 119. So gorgeous. We'll continue to watch these things and see how they build. Hey folks, if you want to get, and we're going to be working on, we have a new weekly market worksheet. Now that's in addition to our daily market worksheet. This is what we want to complete on Fridays. We have the new one. We've already prepared it. We're going to get it worked out for you over the weekend. I'm going to actually fill one out and put it out for you to see how we do it, along with your own PDF of a daily market worksheet, so you can start filling these out for yourselves. We're going to make those available. If you want to get a text with our weekly market crossovers, we will be happy to provide you with that. How do you get on that text? All you have to do is text Charting Wealth, one word, Charting, CHARTING, Wealth, WEALTH, the name of our name, Charting Wealth, not the .com, just Charting Wealth. Text those words to 33222. That's 33222. The instructions are in the email that you get if you subscribe to our podcast. You can also find it at Facebook and all the other places that we put things out, also at our iTunes channel. But text one word, Charting Wealth, to 33222. We will send you no more than 6 texts a month, but they will alert you. These are alerts to our weekly vertical crossovers. Now, if you've not already subscribed to our channel, you need to do that. You just go to chartingwealth.com, you subscribe, give us your email address, and we will send you, every day the market is open, our daily market coverage, both our forecast and our review. And we so appreciate you being with us.